Should you be a passive or active investor in 60 seconds? Let's go. Well, let me show you a chart which helps answer that question. This is the passive investor, and they're buying into their quality companies, and that's the key. The companies have to be quality. That's why we look for companies which are undervalued, high growth, and paying good dividend yields, good cash flow returns. And the passive investor, as they get more capital, may buy into the existing ones they have, or they might buy into new portfolios, which again are high quality, but they'll buy. If the market goes up, they might end up buying less because the price has gone up and they can, for the same amount of money, buy fewer shares. If it drops in a particular stock, they might end up buying more of those shares when it's dropped. Notice at the bottom what it says. They're always relaxed. That's the advantage of the passive investor who has a model portfolio of resilient stocks. I'll show you the active investor next. Like and follow for more.